If you opened your investing app today and thought it was glitching, no, that was real. Every major tech stock took a dive. Apple, Tesla, Microsoft, Palantir, Nvidia, even Starbucks. Yeah, even coffee couldn't perk up the markets today. In this episode, we're breaking down exactly what happened, why stocks are plunging, and what it all means for the rest of August and possibly your wallet. Let's dive in. Let's start with the damage. We titled our portfolio Beginning of the End as a joke, but judging by the red candles today, it feels oddly prophetic. Tempest AI, down. Microsoft, down. Arc, Tesla, CrowdStrike, Palantir, all tumbling. Nvidia and Apple, also down, which is never a great sign. These are usually the steady hands on the wheel. And it wasn't just us. Snap dropped below 9. Meta, Netflix, GoPro, Disney, all red. Even Starbucks closed lower. Apparently those lattes aren't recession-proof after all. Let's talk about what triggered this. The July jobs report was underwhelming, and that's putting it nicely. Only 73,000 new jobs were added, falling short of the expected 100,000. Worse, the government revised May and June down by 258,000 jobs combined. That's not just a soft landing, that's a flat tire on the runway. The employment rate ticked up to 4.2%, which is the highest we've seen in over a year. That has economists whispering the word nobody wants to hear, recession. As if weak job numbers weren't enough, we also got hit with a reminder from the ghost of 2018. That's when the first wave of tariffs under President Trump shook up the markets. Well, they're back. This time, new tariffs were announced on goods from 66 to 70 countries, with rates ranging from 10% to 41%. The average effective tariff now sits around 18%. That kind of policy change can ripple through global supply chains fast. And investors don't like fast ripples. They like calm waters and predictable spreadsheets. The tech sector got hammered. Amazon led the charge, dropping 7% after reporting weak cloud revenue and disappointing forward guidance. That's a big deal considering AWS basically funds the rest of the company. Apple warned that tariffs could cost them up to $1.1 billion. Yeah, billion with a B. That puts pressure on margins, prices, and future earnings, which explains why the stock chart looks like it fell off a treadmill. Tesla, Meta, Nvidia, Alphabet, they all saw sharp declines. And when the biggest, most reliable companies in tech drop, it sends a message to the entire market. Take cover. Hey, real quick, if you like this content, be sure to watch some of our other videos because we've been asking ChatGPT how to invest our money, and you can sort of probably imagine how that's going for us. So if you want to see more like this or more like that, be sure to like and subscribe. So where's all that money going? The answer is safe havens. We saw Treasury yields tumble, especially on the 2-year note, which hit its lowest level in weeks. That's a classic sign that investors are shifting away from risk. And when bond yields drop, that usually increases the odds of a Fed rate cut. Right now, analysts say there's over an 80% chance we see a rate cut by September. The VIX, Wall Street's so-called fear gauge, jumped 28% today. That's a big spike. And it tells us that investor anxiety is on the rise. It's like everyone in the market suddenly decided they'd rather be in a bunker than on the battlefield. So what happens next? This could just be a short-term panic. We've seen that before. But if job numbers keep trending down and tariff situation escalates, we might be looking at a more prolonged slowdown. That said, these dips, they create opportunity. If you believe in companies like Microsoft or Nvidia long-term, this might be a buying window, assuming you're okay with a little bit of turbulence. The key is knowing your risk tolerance and having a plan. Don't let headlines drive your whole strategy. So, if this helped you make sense of what's going on out there, hit that like button and subscribe. We'll keep bringing you the latest, minus the panic, but we'll add in a little perspective. So drop a comment if you picked up any shares today or if you're sitting on cash waiting for the dust to settle. Either way, stay smart, stay patient, and I'll see you in the next one. Every major tech took a dive. Started over. Supply chains. All right, quiet. If you like this content, you want to see more of it, and how we invest our money, then what? Shoot. All right. Be sure to, hang on, let's see. And we're not, be sure to watch some of our other, hey, real quick, if you like this,